Welcome back to the channel where we break down the real forces behind the market so you can finally understand why price moves the way it does. And if you're new here, hit subscribe so you don't get left behind watching the charts without any idea what's actually happening underneath them. Today's video is about what really affects markets, not the headlines, not the hype, but the underlying mechanics that actually move billions of dollars, trap retail traders, create volatility, and shape everything you see on the charts. And once you understand these forces, the entire market starts to make sense. Most retail traders think markets move because of simple stories. Good news means prices go up, and bad news means prices go down. But if that were true, markets would be predictable, and retail wouldn't lose nearly as much money as they do. The truth is far more complex. Markets move because of liquidity, positioning, macro pressures, market maker incentives, algorithmic flow, and institutional manipulation. None of this is visible on a standard chart, but these forces control everything you see. Let's break them down properly. If you strip away the noise and look at market behaviour objectively, price behaves like a hunter. It goes where the liquidity is. It doesn't seek fair value, it seeks money. That's why price constantly wicks into obvious stop-loss areas before reversing. That's why price breaks support or resistance by a few points, only to snap back instantly. That's why perfect retail setups fail in seconds. These aren't accidents. They're engineered movements that allow institutions to fill positions at the best possible price. Retail traders provide the liquidity. Institutional players harvest it. Once you understand that, every strange candle suddenly makes sense. And then there's market makers. They aren't the villains, but they aren't your friends either. Their job is to create liquidity, balance order books, and facilitate trades. But the side effect is manipulation. When retail piles into longs, market makers push price down to run the stops and rebalance. When retail gets fearful and shorts heavily, the market squeezes up to clear out these positions. This is why charts look irrational, because the market isn't trying to move in a straight line, it's trying to maximise efficiency. Most of what retail calls manipulation is simply the market doing what the market exists to do. But to the average trader, it feels like sabotage. Algorithms don't care about fundamentals, feelings, or narratives. They care about liquidity levels, order flows, volatility pockets, imbalance zones, and statistical probability. When you see sudden crashes with no news, violent reversals, perfect sweeps of highs and lows, volatility that appears out of nowhere, that's algorithmic execution. They trade through retail. That distinction matters. Every day, markets are pushed around by forces retail traders rarely think about. Global liquidity cycles, interest rate expectations, bond market stress, dollar strength, geopolitical risk, tech sector earnings, government debt concerns, central bank balance sheets. These factors create underlying pressure that shapes the flow of money. That's why Bitcoin dumps when the dollar spikes. That's why stocks bleed when bond yields rise. That's why liquidity dries up when central banks tighten. That's why crypto pumps during reflation cycles. Retail sees a red candle. Institutions see a macro shift. The emotion retail feels is on the surface layer of something much deeper happening underneath. Retail loses not because they're bad traders, but because they're trading on the final data, the price. While institutions trade on the causal factors behind the price, retail responds to emotion, fear, greed, headlines, hype, whereas institutions respond to liquidity, positioning, macro conditions, volatility, funding, options expiry. You can't beat someone who is playing an entirely different game. This is why retail gets caught buying tops, selling bottoms, and entering positions right before a reversal. It's not failure, it's structural disadvantage. This is actually one of the reasons we created the Crypto Wolfpack. It wasn't about building a product. It was because so many normal people trade completely alone. They panic alone. They celebrate alone. They have nobody in their real life who understands macro, charts, sentiment, or even what a liquidation is. When you're feeling isolated, every move feels personal. When you're with people who see the same patterns, it becomes logical. The Crypto Wolf Pack is a space where people can talk about the market properly. Daily charts, macro updates, news, trading signals, without feeling the odd one out. That's all it is. But for a lot of people, that alone changes everything. The one thing I want to emphasize, especially when talking about market volatility, is security. We've all seen exchanges collapse. We've seen people lose everything, not because of a trade, but because their assets were sitting on a platform that disappeared. Cold storage matters more during volatile markets than any other time. I use Tangent because it's simple, physical, and takes away the single point of failure of seed phrases. It gives you peace of mind so you can actually focus on trading instead of worrying about whether your exchange is going to implode overnight. If you decide to pick one up, the promo code Paula will give you a discount. But whether you use Tangent or another cold wallet, just protect your assets. The safest trade is the one that begins with security. I want to remind you, the market isn't random, it isn't personal, and it isn't emotional. But when we enter a time like we've seen over the last few weeks, it can really feel like that. The system is built on liquidity, positioning, macro flows, and institutional behaviour. Once you understand that, everything starts to make sense. The wicks, the fake outs, the sudden dumps, the manipulation, all of it. If you want to go deeper and understand how we trade in the Crypto Wolf Pack, we have made a free course. The link is in the description below. And if you want daily charts, macro updates, signals, and real discussions, the Crypto Wolf Pack is there when you're ready. Let me know in the comments which part of the market confuses you most, the macro factors, the manipulation, or the volatility. Thank you so much for watching, and I'll see you on the next one.